My name is Deepesh Patel, editor at Trade Finance Global. Today, we're in London at the Trade Finance Investor Day. The structured credit market plays a vital role in global trade, with 80 to 90% of the $24.9 trillion in global exports requiring financing. We're familiar with sectors such as automotive, credit cards, and student loans, which have a well-established asset-backed securitization structure. But trade finance remains underrepresented, with fewer than 10 publicly rated trade receivables securitizations globally. This gap highlights both the potential and the need for innovative financing solutions within the trade finance sector. So today I'm delighted to be joined by André Casterman, CEO of the Trade Finance Distribution Initiative. André, welcome back to Trade Finance Talks.
Thank you, Deepesh. Delighted to be here with you.
Thank you very much. So, André, you've been a key advocate for asset-backed securitization to scale institutional liquidity in trade finance is really important. But what do you see as the most significant barriers attracting more structured credit investors to this space, particularly for SME-focused originators?
Yeah, the securitization is, of course, the key bridge to unlock institutional liquidity and attract capital markets players into the trade finance market. However, with asset-backed securitization, we will be able to increase collaboration amongst risk investors, acting at the level of the junior tranche and protecting the liquidity investors at the level of the senior tranche. So we are still at the early days of creating a market for this. Lots of asset-backed securitizations have been done on a proprietary basis. So the technique is established with the global banks, and they have all had their proprietary programs and so on. However, in the world of new entrants in trade finance, which is the community we are gathering here at the Trade Finance Investor Day, we want to bring a standardized marketplace and platform for asset-backed securitization. So still early days in terms of democratizing access to the ABS market and attracting indeed more and more non-specialized capital markets liquidity providers into the trade space. Because so far the trade funds have active in our trade market have been very experienced in trade. What we want to do now with asset-backed securitization is to attract institutional liquidity from players which don't have this trade expertise, but they will rely on an ABS structure to get exposure onto this asset class they don't know enough about, but like because it represents the real economy.
Yeah. Well, I guess talking about democratizing trade finance, with trade securitization, it is transforming pools of trade receivables into those investable notes. But institutional investors are still kind of held back. What do you think is the big appeal for securitized trade finance assets, and what's holding them back?
Yeah, they want to see early adopters. So we are at the very early stage of creating indeed platform that can democratize access for alternative lenders to ABS investors. So once we demonstrate more and more testimonials, proof points around how this can be done based on cloud technologies and off-the-shelf capabilities, like what we are building with some members of the TFDI initiative, then we'll be able to attract more institutional investors. The ones we are working with so far have been using securitization, but on a one-to-one relationship. And the investors we're working with so far have built their in-house trade expertise. So they know the asset class inside out as if they were originating themselves from businesses. It's quite impressive from some keynotes we have had today how far they have gone into developing trade expertise into asset managers. But we don't want to limit ourselves to those expert asset managers. We want to go beyond those. And this is where asset-backed securitization will enable us to attract additional capital market firms.
Well, I think another exciting theme of this year's conference is actually the appetite for development banks to also support ABS. How can these banks work with private players to actually make trade finance more accessible?
Yes, the development banks we know have always focused mainly on the risk side of transactions more than the liquidity side. And that's exactly what we need. We have three options in the market to attract capital markets investors is to offer credit insurance. Key players, and we'll have indeed keynote on credit insurance today. We have development banks able to take risks often where private credit insurers are not extending their cover. And the third element are capital markets investors active at the junior tranche level. Because the capital markets liquidity can be used at the level of the junior tranche as a risk mitigant for senior tranche investors. And that's, in my view, the most exciting about ABS versus private securitization is you can, as a liquidity provider, you can choose the risk level you want to be exposed to, and you're going to get, of course, the appropriate yields. So you can invest at junior tranche for higher risk or at senior tranche for lower risk. So I think the ABS is an opportunity for us to continue involving more and more capital markets liquidity into this asset class. But we want to reach out to more and more of those institutional investors because on TFD initiative so far we have attracted lots of originators, alternative lenders in particular, focusing on the high yield receivables that often the banks are not touching through following de-risking. Now the next goal in 2025 is to attract indeed more and more ABS investors.
And I guess trade tech has been a notable player within this sphere. But as highlighted today, the company's moved from I guess securitization as a service more towards subordinated risk capital. Can you explain kind of trade tech's shift in 2024?
Yeah, I think it's a phenomenon I've seen with multiple fintechs. They always have to deliver more. As new intermediaries in transactions, whether they digitize, whether they securitize, I've seen whether they are even blockchain infrastructures, all of them same lessons over the last few years. They need to continue investing in delivering more value to their clients. In the case of trade tech, back to your question, indeed, the focus has always been securitization between originators and investors. And that has worked pretty well in terms of enabling new entrants in origination. So non-bank lenders originating those high yield receivables to engage with asset managers, with trade tech acting as a securitization hub. This is good for one-to-one relationships. Now, in addition to that, trade tech is expanding indeed this year to asset-backed securitization, meaning they will be able to involve non-specialized trade funds, institutional investors that want to not get the full exposure on trade, but get protection from risk investors. And that's the whole point about the ABS, is this trenching and enabling basically to choose your own risk level based on the expertise you have had to fund trade flows. So the ABS is an additional capability offered by trade tech to basically indeed provide a risk protection when credit insurers are not available, development banks are not available, but we still need the liquidity from capital markets. And you have these junior tranche investors who will act as the risk mitigant on those transactions.
Thank you very much. So final question, when we come back in 2025, how do you expect the market to change and evolve?
Even more alignment between policy and technologies, because we know new technologies require new policies, like we have seen in 2023, the ETD Act, English law. We've seen 2024 this year, the French law. Next year, we're going to see the US law and additional countries as well. So more and more alignment between policy and technologies for tracking assets on the blockchain, because that's what MLETR is all about. And more and more tokenization of illiquid asset classes. Capital markets, as I like to tell payment and trade bankers, are far more advanced into leveraging tokenization. So in 2025, we're going to see the evolution of tokenized investment products. So far, it has been around highly liquid asset classes like US Treasury bills. 2025, we're going to see more and more illiquid asset classes being tokenized. And we have here at the Investor Day, XDC Network, Trade Tech, and Securities working together on this in trade, but also having worked, Securities in particular, with BlackRock on those securitized, tokenized investment products. So that's really for 2025 the expectation to see more and more adoption of those new technology options.
That was André Casterman, CEO of TFDI. André, thank you very much for joining us on Trade Finance Talks.
Welcome.